Hello, all. Bob Pisani on the balcony at the New York Stock Exchange. Behind me, there is the podium for the New York Stock Exchange where they ring the opening and closing bell. It's been a very interesting week and a very interesting morning of IPOs. The important thing that I think everybody wants to know is, why did the market go down fast and rebound so fast? And quite honestly, you could attribute it largely to hope. I used to call it hopium. I know that's a little hokey, but let's just say faith. How about faith that, number one, the coronavirus is going to be contained? And there is some evidence that's happening. Most of the real contagion is occurring in the Wuhan area. Most of the deaths are all occurring in China. So there is some reason to be hopeful about that. But it's not entirely clear that it is completely contained. Again, it's sort of faith. There's also faith in the Federal Reserve. If anything goes wrong, the Federal Reserve is going to keep cutting interest rates. There's also faith in global central bankers and faith in the Chinese. They are cutting essentially rates. The Chinese are cutting tariffs. So there's a lot of faith that the Chinese government is going to do everything it can to stimulate. And we know there's a hit on the Chinese economy around this. That's very obvious already. But there's some hope that that could be mitigated. So you got hope that the coronavirus is not going to spread widely. Hope that the death rate is not going to be that high. Hope in the Fed. Hope in the Chinese officials to stimulate their economy. And finally, just kind of hope that this global financial slowdown is going to be temporary. Okay, so we know companies have been saying, Adidas and Nike, Ralph Lauren have been saying about the impact of the coronavirus on sales. Carlsberg Beer came out and said Chinese aren't drinking any beer right now. And that's a problem. But there's hope here that that's going to be temporary and may even reverse. Now, is this all factual? No, it's not. But the stock market isn't necessarily like that. Stock market trades on future expectations of an earnings stream, not the present earnings stream. So just understand that, and let's hope that everybody is right about this. What else?
Is the coronavirus a direct cause for the oil drop or a minor factor?
Yeah, is the coronavirus a direct cause of the oil drop? The drop that we have seen in the last few weeks, I think it's safe to say yes. And think of it this way. The world consumes about 95 million barrels of oil a day. You could round it off to 100 if you want. The United States is the largest consumer of oil in the world, north of 20%. But China is a very significant source as well. The numbers fluctuate, but you're safe to assume China is at least 5, 6, 7% of world consumption in oil. And the Chinese economy has really ground to a halt in the last couple of weeks. I mean, they essentially canceled New Year's, and not just in Wuhan. That's pretty significant. Imagine doing that here in the United States. So there's clearly less oil consumption going on in China. Remember, on top of that, we also had general oversupply around the world. OPEC has been meeting, and the indications are they might have to cut the supply that they're providing to the world. But OPEC isn't the big provider it used to be. They only supply about a third of the world's oil now. The United States is the world's largest producer of oil. We produce north of 11 million barrels a day. The Saudis are just behind us, but this is all because of that fracking revolution. What's next?
Will we see the Dow at 30,000 by mid-year? Could we be close to a market peak?
Will we see the Dow at 30,000 by mid-year? Yes, it's quite possible. Is this a market peak? So remember, what's the four things that have been moving the market in the last year? Number one is the U.S. consumer. The U.S. consumer consumes more stuff than anybody in the world ever has in history. The U.S. consumer is doing well. There is no sign of a recession. That's the most important thing. That's a positive. Second, there's a belief that the trade war is still out there, but there's a truce, at least for the moment. For the moment, that is a positive. Two positives here. That there's a Federal Reserve. There's a belief the Federal Reserve is neutral, and they're adding liquidity to the system. That's a third positive. The fourth element here that's driven the market higher is the belief that the global economy is bottoming out, that Europe's going to do better, that China's going to turn around. Now, this whole coronavirus story has sort of smacked that thesis around a little bit. We don't know. Maybe the global economy is now going to sort of stay kind of crummy and decline a little more. The market is acting like that is not going to happen. We still don't know that. So 3 of the 4 things that move the market forward are positive. The fourth one is sort of either side of positive or negative. We don't have an answer. One thing that's an issue is valuation. Stocks are expensive now. The bulls say, Well, yeah, stocks are expensive because everything is really good. You can have a high multiple. A multiple is essentially the PE ratio, the price divided by the earnings. On the S&P 500, it's 18.5, approaching 19 times 2020 earnings. That's the multiple. Historically, the multiple is around 15, so 16. So, yes, it's a little pricey, but compared to what we have in the global economy, if things are really doing well, you can have a higher multiple. It's gone for many, many years. So that doesn't mean necessarily the stock market's going to come down on a higher multiple. What matters is the global economy and people's perceptions of how that's going to impact earnings. And right now, it's fairly positive. What else?
Why did Casper cut its IPO price range from 17 to 19 to 12 to 13?
Why did Casper cut its IPO price? So Casper is a mattress company. Don't kid yourself. It's not a technology company. They deliver mattresses. They use technology to deliver it. It's in a box, but it's still a mattress company. So what's happened is the IPO business is doing very well, but investors want a path to profitability. Casper is not profitable and doesn't have any immediate prospects for being profitable. So they tried pricing it at $17 to $19. The market pushed back. Basically, a lot of people said, I'm not buying this, not at 17 to 19. So the question is, where do you find a pool of people who are willing to buy what they have to sell and the amount they have to sell? And it ended at $12. That's where they priced it overnight. It opened at $14.50, and right now is trading around $15. That's a positive. Well, how do you know a positive IPO? Well, investors pushed back and said, no, you don't make. There's no path to profitability. We don't want it right now at that price. Number two, direct-to-consumer sales is tough, and it's a hard thing to figure out. Look, go ask Peloton. Go ask Smile Direct. These are not easy things to do. You have to spend an awful lot of money to get new customers, and when you stop spending money, they often stop. So it's a tough game to play out there. And it's a mattress company. There's a lot of competitors out there, so it's not obvious home run. So here's how you know you're a successful IPO. You price it down a little bit, so the people who are taking the company public don't get as much, but it opens up. That's a good sign, because the people who bought it last night, it was given to this morning at $12. It opens at $14. They made money. These are mostly mutual funds, by the way. So that's a good sign. Now, it'd be a great sign today if opening at $14.50, you close at $15 or $15.50, something like that. Why? Because you, the viewers, you buy at the open. You think it's been successful? You open at $14.50, you close at $12. I don't think that's successful. You open at $14.50, you close at $15.50. Hey, everybody's happy when that happens. That's successful. Let's see if that happens. Let's hope it happens. What else?
How is the IPO market doing overall in 2020?
How's the IPO market doing overall in 2020? It's doing really well. In fact, it's surprisingly well. And one of the reasons it's happened is once we got into 2020, there's this thing called mean reversion in the markets, which is stuff that does terrible for a long time or is down, tends to do a little better in the new year because people take a look at it and they look at stuff that might be cheap and they say, well, it's buy low, sell high. It's not buy high, sell low. So, for example, Lyft or Uber or some of these other names that were out there that kind of had a tough time in the second half of 2019, they were IPOs. They started doing better in January, and as a result, the overall IPO market looked better. So you want to look at IPO. That's an ETF, an exchange-traded fund. The symbol's IPO, and it's a basket of the last 60 or so largest IPOs. It goes back about a year and a half or so, and that hit an historic high yesterday. That tells you that stuff that has been out there for a while is pushing the market up that maybe underperformed in the second half of 2019. On top of that, we've had some very good IPOs in the last week or so starting out. So, for example, we had Reynolds Consumer. Reynolds Consumer is Reynolds Wrap. This is not a biotech company. This is like, you're talking consumer staples here. That did really well. One Medical, which is a kind of like a hip thing. It's medical clinics. You walk in medical clinics. That did really well. And today, Casper did really well. Now, we're seeing a company today, PPD. This does biotech research services. They just opened an hour or two ago. They opened at 31. It priced at 27. The range was 24 to 27. So that's successful. You price 24 to 27. Is the range you say we'd like to open in. They price it at 27. That's the high end. Then it opens at 31, and it's trading up. That's pretty successful. This firm goes out and they do essentially biotech research services. So if you're a biotech company and you can't afford, pick a number, $200 million for a lab, you need to do research, you contract them to do research with you, essentially. It's a contracted labs. There's a lot of need for that. We're waiting for another one to open, Schrodinger. Schrodinger's real science fiction stuff. It's backed by Bill and Melinda Gates Foundation. Bill Gates, founder of Microsoft. They do drug discovery, so it's software around drug discovery. So you put your data in to the software, and it suggests novel molecules for drug development more readily. That's real science fiction stuff. That's pricing today. There's a lot of interest in this kind of stuff. Oh, by the way, I mentioned the IPO market. This is a new high again, as I mentioned, for that IPO ETF. What else?
Last question. Why did Tesla rise so much and so suddenly?
Oh, boy. Why did Tesla rise? This is the story of the week. Why did Tesla rise so much? And why did it go down so much? Well, you get emails when somebody's, can you explain to me? I call them 4 exclamation point emails. Could you explain? Or they stop you in the street. Can you explain why Tesla went from $960 to $720 the same day? And the answer is, fundamentally, no. There isn't any reason. You might flip it around and say, why did it go from 600 to 960? People always ask why it went down, never why it went up, only afterwards. There's a couple of things going on. First, the commentary out of the company last week was good. The numbers were good. It looked good. That's the most important thing. The second thing is a few other things happened, like Panasonic, which is in their a partnership with them in the battery business. They came out and made positive comments. All that is good news. The stock should go up on that. But, you're talking, 700 to 960. There's no fundamental reason why that would happen. Now, you can look at this in a broader way. You could say, oh, geez, all of this is so positive. We believe the earnings are going to go really up. Fine. You're really stretching it, though. So last year, essentially, Tesla made no money. Profit, I'm talking about. This year, I think there are estimates of, $8 per share. And there are people who are guessing, that's the word, guessing 2021, they might make $16. So you see the projection here? What happened last few days was some analysts started coming out saying, oh, because of all these positive comments, we're now projecting out into 2023, 2024, they could make $30. Well, that's nice. But you see what's going on here? 0, 8, 16, 30. It's like progression, double every time. Well, that's not going to... They have a history of making comments that promises that don't necessarily pan out. So far, they've been doing well, and they've been pleasantly surprising people. It's terrific, and I think it's wonderful. But this is how things get crazy. Human beings aren't necessarily rational all the time. So some kind of frenzy occurred once it started going up sufficiently fast. And the rest of the part of the rally is very hard to explain on fundamental basis. You can't, really. It was just a bit of a frenzy. And frenzies generally don't end well. And that's part of the problem. This is the nature of human beings. And there are certain numbers of people that are going to see moving up like that, and they're going to sell aggressively into it. So momentum trading is like that. It moves up very fast, and it'll move down very, very fast. So just don't kid yourself that it had anything fundamental to do with what's going on. But still a great company, and still a wonderful inventor, in my opinion, one of the great minds of the 21st century. That's it from down here at the New York Stock Exchange. Everybody have a healthy, happy, and safe trading day.